Good afternoon, ladies and gentlemen. Today I'm going to talk about something I've mentioned before. I may have even written about it in one of my books, but you're not likely to have ever heard about this before, and probably you might hear about it in the future, but I would say it's because somebody took my information and claimed it as their own. I'll never get any attribution, any credit for anything, apparently. So the point I wanted to make is that Wall Street has a way of manipulating investors. And in fact, I've mentioned this in terms of these copywriting newsletter boiler room shops, the big shops like Agora and many others. What they'll do is they cover every single scenario. They cover every single strategy, so that one of those newsletters is gonna nail it. You see, they have so many different possibilities, and of course, most of it is focused on, fear and panic and doom and just trash. But they've learned over the years to cover every scenario. So they say, "Oh well, look, we predicted this. You see, this is on our newsletter. We predicted this." Right? We got these great stocks perform well. You see. And this all began many decades ago, before you had the internet. You had the snail mail, and what would happen is that these guys that would send out their little newsletters, what they do is they'd get their big lead list, their customer list, and they divide it up into 2 or 3, sometimes 4 or even 5 different sections. And what they would do, they would have 2, 3, 4, or 5 different outcomes for their newsletters, or maybe they would have, different newsletters. And so they would have the different possibilities, right? So maybe they would say, okay, Raytheon would be, a good stock to buy. Another newsletter, another mailing they would send out on another list, that Raytheon is not going to do well, right? Same thing with IBM, right? So on and so forth. And they would do this knowing that one of those sucker lists is going to hit pay dirt. One of those options is going to do well. So what they would do then, of course, let's say they had 5 different lists with 5 different investment recommendations. Let's say they had one that panned out, that did fairly well. They're going to contact those people. Oh, hey, you see what we did? We gave you that free pick. It did really well. Would you like to sign up to our newsletter? We're going to give you a special. Of course, they didn't tell those individuals that, the 4 other sucker lists they had was a complete disaster, right? So Wall Street's been doing a similar situation for quite a long time. The copywriting boiler room newsletter companies have been doing the same thing for a long time as well. But let me explain to you, because some of you may know about these tactics used by these boiler rooms like Agora Financial, but you might not know about Wall Street doing the same thing, right? Now, I learned this early on when I worked for Wall Street firms, and they do the same thing. And I'm going to show you today. I didn't even look for this. I just happened to come across this. I don't even pay attention to Wall Street. Sometimes I'll look and see kind of the bullshit that they're talking about to inform people, to show them how behind the curve they are. But I just came across this, and I thought it was pretty funny. So I came across a bullish statement by J.P. Morgan recently. And I remembered, I said, wait a second, but J.P. Morgan has been very bearish, right? They've been very bearish. J.P. Morgan has been the last holdout, the very last holdout of the Wall Street firms, unwilling to boost their S&P 500 forecast for 2024. And in fact, you can see here, as late as December 13th, 2023, their forecast for 2024. Go ahead and show you now. Let's go ahead and read this. So here you have it here. So their earnings growth estimate is 2 to 3%, which I don't know where they got that. That's like that's so far off of any other firm I've seen. The consensus during December was about 11 to 12%. I'm not saying that's going to be I think that's a little high, but I saw nothing anywhere close to 2 to 3%. I think that's extremely low. But nonetheless, their price target for 2024 is 4,200 with downside bias. In other words, what they're saying is, I think it's even a good chance it's going lower than 4,200. Okay. And I mentioned December 13th because, of course, that's about as late as you're going to get into 2023 for the forecast for that year, moving forward, looking into the next year. Okay, we'll talk about what their forecast is currently. Today is March 29th, 2024. So a little more than 3 months later. Okay, you can just read here. As we approach 2024, we expect both inflation data and economic demand to soften as tailwinds for growth and risk markets are fading. Overall, we are cautious on the performance of risky assets and the broader macro outlook over the next 12 months. Risky assets would be namely stocks, due to building monetary headwinds, geopolitical risks, and expensive asset valuations. Okay. And so you can just go ahead and read all this nonsense here. But the bottom line is 4,200. And I talked about this actually in a video on the website, as well as for research subscribers. I mentioned this because, of course, those of you who get the research, I came out in June of 2023, and I said, look, full force, get in. We're going to hit a bull market. Now, I had talked about, just to give you all some perspective, those of you who haven't followed my research, don't get my research, Wall Street completely missed 2022. 2022, as you'll recall, that was the beginning of the collapse, and it was exacerbated by the declaration of war, or I guess they Russia invaded Ukraine in February, and I believe it was February, or was it March? And then, of course, you had the Fed raising interest rates, I believe 25 basis points in March, and would go on to have several 50 basis point hikes. So I was advising investors to get out of the market, expecting a bear market, potentially a recession, certainly a collapse in the market by the beginning of 2022. I even actually came out with a forecast of a bottom in the market, which the bottoms were hit in October. They were hit in October of 2022. And we're cautiously advising to get in over the next several months, just kind of gradually getting in and pointing out to investors, hey, you can't nail the bottom. Assume we hit the bottom. Get in. Okay, get in. Don't worry about nailing the bottom. Could it go back? Could it test the October 2022 lows? Sure. Don't worry. You don't want to be left behind. I emphasize that month after month, right? But I mentioned in 2023, early on in the beginning of the year, that there was a risk in the second half of the year of possibly a recession. Now, my recession probability all along was between 70 to 80% mild recession. I never forecast a high probability of a normal recession, much less a severe recession. It was always a mild recession, very mild. Okay. However, by June of 2023, all cards were off the table. I stated a recession is not going to come, and the market's going to fly. And I forecast by the first quarter of 2024, the S&P to be at a high of 4,800. At the time, the S&P was about 4,200 or 4,100. Now, keep in mind two things. First of all, since then I have boosted my forecast twice, and I've been ahead of Wall Street ahead of the curve the whole time. Second thing is, understand, go back, if you don't remember, you had pretty much Wall Street was predicting a recession, not just in June, but July, August, September, October. They were predicting a recession. They had low targets on the S&P, right? They did not come out and raise their targets. They copied my lead. They followed my lead 5 months later. More than 5 months later, in the third week of November, almost all Wall Street firms between the second and third week had come out and boosted their S&P targets from the high 4,000s to the low 5,000s. About, in general, say 47 to 5,200. Just about all Wall Street firms, except two. Goldman Sachs, and you can look all this up. I might have something wrong. This is from memory. Might be one detail or two details that I am not getting correctly. But this is, for the most part, very accurate, I know. You can check me on that. There were two firms, Goldman Sachs and Morgan Stanley, did not boost their 2024 S&P forecast. Goldman Sachs was basically forced to do so by the end of the year. By about the third week of December, Goldman Sachs came out and raised their S&P forecast to something more reasonable. Because why? Well, because they were around 4,200 or so for the 2024, and they had to get reasonable because the S&P had already gone, it had already flown. Morgan Stanley failed to do it. They didn't do it. They're the last holdout. Okay? And you can see that here, reflection here in this December 2023 forecast. Right? 4,200 they're calling for the S&P in 2024. Now, let's take a look. As of March 25th, I believe, you can see the most recent forecast for Wall Street. Okay. Now, keep in mind, Wall Street, and I've talked about this in the research, Wall Street is oftentimes wrong. But they're not always going to be wrong. The key is to understand when Wall Street is going to be right and when they're going to be wrong. Wall Street is most often wrong during significant turning points. They can't detect the turning point. In fact, you may have noted I talked about Mike Wilson. Mike Wilson is the Morgan Stanley guy, the chief strategist at Morgan Stanley, who basically was told he had to leave. He had to go to another department. Why? Because he cost Morgan Stanley investors their ass. He'd been bearish the whole time. Mike Wilson was one of the few Wall Street guys, maybe the only one, who was bearish in 2022. I don't think he was on top of it as much as myself. He wasn't bearish early on, but he became very bearish, and he remained bearish after 2022. He remained bearish all throughout 2023, fear-mongering, broken clock, blah, 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 blah. And so he was basically pushed aside because I think probably they lost a lot of business. Customers were complaining. And that just goes to show you these guys, they don't know what the hell they're doing. They can't shift gears. They get a narrative and they latch on to it. Okay? They're salesmen. That's what they are. They're all salesmen. They're not real research analysts. They're not real strategists. They're fucking salesmen. I know this. So, getting back to JP Morgan, you can see here, this is as of March 25th, and Oppenheimer raised their forecast for 2024 S&P to 5,500. Okay. Now, once again, I'm not going to discuss what my forecast is and whether or not the research is coming up in April, whether or not I'm going to change it or not. I'm not going to discuss it at all. All I'm going to tell you is what I already told you, is that in June of 2023, I had boosted the forecast to 4,800. During a period when Wall Street was bearish, they were predicting a recession, and they did not have anywhere near that forecast. They only got that forecast, they only mirrored my forecast more than 5 months later. Fast forward 5 months later in November of 2023. Recently, it's got to 4,200. They haven't changed it. They haven't changed it at all, right? Morgan Stanley, they're caught in a bind. What are they going to do? Well, you see, they're going to get a new strategist for their private client services. Why? Well, it gives them an opportunity to change their forecast. Otherwise, they could be left in the dust, right? What's JP Morgan going to do? Well, I came across this recent piece here. This is what I wanted to show you. Remember their forecast. You see it right here. You saw that report in December. So what are they saying now? Take a look. This is today, March 29th, I believe. 29th I got this, or the 28th. And you can see they're bullish. They're bullish. They're talking about stocks going higher. They're going to tell you why the stock's going to go higher, this and that, and wow, and no, it's not a bubble, and going to go higher, this and that, and right? Okay, great. What's your forecast? Okay, there's no forecast. Why? They haven't changed the forecast, you see. So this is from JP Morgan Private Bank. This is JP Morgan. So the point I want to make is that these Wall Street firms have different divisions. They have their private bank, their equity research view, their strategist view. They've got all types of different categories that are going to talk about the stock market, and they can vary tremendously. JP Morgan is stuck. They're stuck in a corner now because they've got this 4,200 forecast for the S&P 500. The S&P 500 is getting ready to hit 5,300. And so what are they doing? They got to tell you they're bullish, right? They're coming out with this report hoping that you don't know of their forecast for 2024. I don't know what they're going to do. Maybe at this point it's too late for them to, they have to hope and pray that we're going to hit a recession, a bear market, right? The problem is that, well, as higher, S&P continues to go higher and higher and higher, well, by the time we hit the bear market, maybe we're not going to even come close to hitting that 4,200, right? So they got to do something. But you understand the point now. All these Wall Street firms are guilty of this. You may read something here that has, a bearish stance, and then a month later, a bullish stance in Wall Street, but they haven't changed. It's a different department. It's a way for them to make it look like they're accurate. Okay, all the firms do it. That's why paying attention to Wall Street is basically a waste of time for the most part. But I wanted to point that out. And once again, look for Morgan Stanley. Mark my words, it's going to happen. Morgan Stanley, they're going to get a new strategist, and it's going to allow them to boost their S&P forecast for 2024. Because right now they're looking like they got egg all over their face. And JP Morgan, what are they going to do? Right? What are they going to do? I think they're going to hope and pray and wait for a big market downturn. The question is, are we going to get enough of a downturn to get that 42? Certainly, their forecast is not going as they planned. Things aren't weakening as they planned. And I talked about this actually several months ago. They haven't been following consumer sentiment, obviously. They have not been following consumer sentiment. So there you have it, folks. Just a little lesson there, how Wall Street fools investors. And you better believe me, if Wall Street doesn't know what's going on, what do you think the media knows? They're completely clueless. And then you look at the lowest hanging fruit, these YouTube fake investment gurus. Who do you think they listen to? They follow the media. They're completely, in fact, none of these fake investment gurus had a fucking clue in 2022, because I sat there and watched it. They didn't understand about the big picture. They didn't understand about looking at the big picture and understanding that market risk is the big thing. They were focused on their little stock. Well, I'm a value investor. I am this kind of cash flow. Look at my Excel spreadsheet of the stock. It's Kathy Wood. Folks, market forecasting is very important. The market determines 85 to 90% of the moves of all individual stocks. Okay? And if you don't understand that by now, after seeing what happened in 2022 and what's happened in 2023 up to current, especially the second half of 2020, especially the past 5 months, right? Look at what's happened in this booming bull market. If you don't understand the market dictates the majority of the moves, the majority of the time of all stocks, then you are behind the curve. Okay?
terms of getting back as an investor, if it's coming down to here, almost irrespective of what's going on, I have to believe, if I have to make a call in advance, and of course I can change depending upon what happens, but I have to believe this is where you want to start doing that 18, 17, around there. Their earnings report is a complete game changer, at least for quite a while. Bottom line, NVIDIA now is going to enter the realm of Tesla, Apple, and all these other big, I mean, listen, NVIDIA can come down to 150, come down to $100. If you don't think it's possible, then you don't understand how the market works. I mean, listen, NVIDIA can come down to 150, come down to $100. If you don't think it's possible, then you don't understand how the market works.